Investing may be difficult and dangerous. Venture, it requires a great deal of guts to invest your hard-earned money in the unknown in the hopes of making a profit, but throughout history there are countless examples of investors who have done so and succeeded. For example, consider being one of the lucky bulls who purchased Tesla in 2009. However, what if I told you that you could be in a position similar to those lucky bulls, still early in the grand life cycle of Tesla, the greatest ever corporation in the world? Let's investigate why even A. Small investment in the company could yield substantial returns thanks to Goldman Sachs' bullish price prediction. Cathie Wood's absurd appraisal of $3,000 per share was the target. Before we talk about all of this, please hit the like button and subscribe. We'll look at the various factors affecting Tesla's stock and attempt to make sense of it all. Oh, and did we mention the rumor about the fully automated ride-hailing network called the Tesla network that might make the company even richer? When the Fed implemented a series of rate hikes in late 2022, Wall Street saw some ups and downs with the stock market. However, overall, things don't seem to be as awful as they seem. As for Tesla, many seem willing to acquire the shares for 50 times what Tesla earns per share. What is the probability that the value of Tesla shares will match what everyone predicts? Let's begin our search for January 2022 clues first. Let's hear from Mark Delaney. Analyst Mark Delaney works at Goldman Sachs, a global provider of investment banking, securities, and investment management services. He specializes in covering the automotive and transportation industries, and he gained notoriety for his coverage of Tesla in January 2022. Mark Delaney maintained his buy recommendation for Tesla shares, but increased his price objective from $375 to $400. He feels Tesla is doing better than expected and has the greatest concept for an electric vehicle. He also thinks that the growing global interest in electric vehicles is beneficial for Tesla's financial results. Other than Mark, Elon Musk and Cathie Wood have reached a consensus. Musk has informed his staff that provided the company continues on its current course, he concurs with Wood's ARK Innovations' $3,000 per share assessment of Tesla. Although electric cars from Ford, GM, and Toyota are soon to be available, well-known investor Cathie Wood still has a lot of faith in Tesla, and the company is one of her favorites. She began purchasing Tesla shares in 2013 and has been a vocal supporter of the company ever since. Tesla is one of the largest positions in several of her ARK Invest funds, and she has predicted that the stock will reach much higher levels in the coming year. It's evident that Cathie Wood's confidence in Tesla is well placed as the firm pushes the limits of what is feasible with electric vehicles, and it appears that the market agrees with Cosby Wood's assessment despite the competition. The price of Tesla stock is still rising despite any short-term fluctuations. From Tesla's viewpoint, the business line of robotaxis is a major contributor, accounting for 60% of projected value and over 50% of anticipated EBITDA earnings before interest, taxes, depreciation, and amortization in 2026. ARK stated across our simulation set we expect electric vehicles to constitute 57% of the company's revenue in 2026, albeit a substantially lower margin than robotaxi revenue during the grant. Opening of Tesla's $1.1 billion factory in Texas on April 7th, Elon Musk made an ambitious promise. He declared that Tesla was developing a new car that would be a dedicated robotaxi with a futuristic design capable of operating without anyone inside the robotaxi. In essence, would be a robotic version of a ride-sharing service like Uber or Lyft. While Musk did not reveal a timeline or any visuals, he did state that Tesla's car would be capable of driving themselves by the end of 2022, with full self-driving FSD being a crucial factor for this, however, ARK, a fund that invests in disruptive innovation, cautioned that the simulation they conducted was highly dependent on the year Tesla launched its robotaxis, and they predict that Tesla will commercialize autonomous ride-hail in 2024. On Valentine's Day, Piper Sandler sent Tesla some love by increasing the stock's price objective. Regarding their opinions on Tesla, Piper Sandler is a US-based financial services company that offers a variety of financial services such as investment banking, equities research, and asset management. In January 2022, Piper Sandler had a rather optimistic outlook for the business. Alexander Potter, a Piper Sandler analyst, lifted his price target for Tesla stock from $400 to $410, citing greater confidence in the company's long-term initiatives. According to Potter, Tesla's market dominance in electric cars, advancements in autonomous driving, and expanding energy storage sector were important contributors to its optimistic outlook. Prospects, according to Morgan Stanley analyst Adam Jonas, the electric vehicle industry is currently like a race, with Tesla leading the pack. He likened it to a marathon, adding that Tesla is at mile 21, while everyone else is either at mile 2 or is still tying their shoes. With a $5 billion investment, Tesla is expected to build a new gigafactory in Nuevo Leon, Mexico, which is expected to become the world's largest electric vehicle production facility. Jonas believes that Tesla's recent record deliveries of cars demonstrate that the company's position will improve as the race goes on. He estimated the automaker would sell about 2 million cars in 2022. So he raised the price. Additionally, to meet rising demand, the company opened 2 new factories in the last few years, one in Austin, Texas, and the other in Berlin, Germany. According to Governor Samuel Garcia of Nueva Leon, Tesla may start building as early as March 2023, as the last permissions needed for the factory's construction are almost ready to be approved. Elon Musk, the CEO of Tesla, has announced intentions to develop a next-generation car, which might lead to the manufacturing of vehicles by the business as early as next year in Mexico. Details about the production schedule have not yet been released by Tesla. With the new plants in Berlin, all of these adjustments will help the business increase revenue and streamline operations more quickly. In Mexico and Austin, this means that Tesla will have more opportunities to boost gross margins, which it can then use to improve customer service costs and net worth growth. Although the company's growth has been limited, we are confident that Elon Musk can handle any issues that may arise in the future. It will be interesting to see how they resolve these issues, even with tax breaks and other government incentives for alternative technologies. For instance, the cost of a Tesla vehicle is still too high. After analyzing all production data, delivery percentages, and deliveries, some analysts predicted that 900,000 deliveries of the Model X, 700,000 deliveries of the Model 3, and 1.1 million deliveries of the Model Y, as well as deliveries of Tesla's new models, the Cybertruck and the Tesla Semi, would occur in 2023. It is anticipated that Tesla will supply 5,000 Cybertrucks in 2023. However, assuming all of these models continue to sell successfully, that number will rise to 50,000 in 2024 and 4,750 semi-deliveries. Tesla's management faced difficulties because they lacked sufficient batteries to power their products. The company's battery issue should be resolved by the Nevada factory, which has a proposed footprint of over 1.9 million square feet and will help boost annual production of Tesla cars to over 500,000. As a result, the company's gross revenue could increase, and the electric vehicle market there is currently more rivalry. Mercedes-Benz, Volkswagen, Subaru among the major automakers aiming to sell electric vehicles in the coming years are Ford and BMW. Ford, for instance, offers the electric pickup truck F-150 Lightning and the Mustang Mach-E crossover SUV. Mercedes provides the EQS, an electric premium sedan, and the EQC, an electric SUV. Subaru and Toyota are working together to build the all-electric Solterra SUV. BMW makes a number of electric vehicles such as the i4 electric sedan, the AX3 electric Chevy, and the i3 compact car. Additionally, as the industry moves toward electrification, many other automakers plan to release more EVs in the upcoming years. When this happens, there will be more competition for Tesla's market share, and tech companies may also join the fight even though they still have a long way to go. It's encouraging to see that Tesla is currently so far ahead of the competition. If you own Tesla stock, you could be sitting on a large sum of money. Please feel free to share your thoughts in the comments section below. If you think this video was helpful, please hit the like button and remember to subscribe. Thank you for watching, and we'll see you in the next video.